Hello and welcome. The topic for today's presentation is types of banking. That is the banking types present in India. So let's begin with the branch banking. Now, branch banking is a system of banking wherein banking occurs via branches which are set up under Section 23 of Banking Regulations Act 1949. Now these branches are well equipped and they take care of all or a variety of banking services for the customers, as a single branch includes a specialized branch. It's a specialized branch which includes a satellite office, an extension counter, an ATM, an administrative office, a service center, and even a credit card center. So this banking is highly advantageous as it provides better management and inclusion and diversification of risk because the risk is spread across the branches. Moving on to unit banking, it is a system in which banks operate from a single branch only or a few other branches which are operating locally. So these branches or this branch takes care of the entire local community of the area. Now, obviously, this is a small sized branch which in turn facilitates faster decision making, but it also leads to no diversification of risks at all. Then coming to mixed banking. Now, a system in which banks take up commercial and investment banking under one roof is known as mixed banking. Now, for example, they take up various kind of activities like giving short-term and long-term loans to industrial concerns, then also giving financial advice to customers or promoting industrialization is one of the few functions of mixed banking. Coming to chain banking, a system in which independent chartered banks are controlled by a group of persons. Now these banks, they still maintain their independent existence. That is, in a chain, each of the bank has its own independent existence. None of their functions or none of their operations overlap with each other, as each bank in the chain is assigned a specialized function or a specialized role, so that there is no overlapping of interest at all. Retail banking. Now, retail banking is a system of banking in which transactions are done directly with customers only, and there are no transactions with other banks and corporations whatsoever. Now, this provides all kinds of services to the customers like savings accounts, transactional accounts, mortgages, personal loans, debit and credit cards, everything which includes a normal bank, which is included in a normal bank. Coming to wholesale banking. Now, this is banking entirely and specifically for high net worth individuals or commercial banks or mid-sized companies, etc. Now, this gives them an ease of access to a complete portfolio, which is very much essential for individuals or companies of this size. Relationship banking. Now, a system in which banks make conscious efforts to understand the needs of a customer and provide him with solutions which best resonate with his needs. Now, banks are able to gather critical soft information about these borrowers or clients, which is really impossible otherwise, because people don't give out their information very easily to everybody. Due to the cordial relation thus developed, it promotes responsible behavior among clients and they do not falter on the installments. So this is one thing that has actually been seen across different banks who take up relationship banking. Correspondent banking. Now, it was undertaken by banks to do business in foreign lands where they don't have any physical presence. Now, they act as banking agent for home bank in places where home banks does not operate. Thus, this generates loyalty among customers as they are able to do banking in the foreign lands with their own home banks. Coming to universal banking, it is a system in which banks undertake a variety of services like commercial banking, investment banking, mutual funds, insurance, etc. Now, this really boosts the investor confidence and makes the operations also very cost effective because a lot of activities are taken care of by a single bank under one roof. Moving to social banking. Now, it is basically banking for masses and poor, which has made financial inclusion possible for this segment of society. RBI has in fact taken many initiatives to include remote segments of society in regulated banking system via this, because it is very much essential. Also, the various schemes which RBI has launched are 3-year financial inclusion plans for banks, or it is also promoting that each of a new bank which wants to open new branches, 25% of that share should go to rural areas. Virtual banking, as the name suggests, it is a system of banking where banking operations are done entirely online. Because everything is online, a lot of overhead and inventory costs are reduced, so the operations become very cost effective, but it is a very competitive space and banks really have to struggle hard to develop a niche for themselves. Now there are two types of banking here. Narrow banking we'll begin with. So narrow banking is in contrast to universal system of banking and takes care of very streamlined operations by mobilizing funds in risk-free government securities only. And Islamic banking is banking as per Sharia law, and it is generally done for development of Islamic economies only. Lastly, we come to shadow banking. It is a system in which non-banking financial intermediaries carry out similar functions as of commercial banks. That is why it is known as shadow banking. They are not exactly banking companies, but they are non-banking financial companies which operate as on the similar lines of commercial banks. So various activities they undertake are credit intermediation, then liquidity transformation, then we have maturity transformation, etc. Now they are all regulated by RBI, and these include NBFCs or non-banking financial companies, mutual fund firms, mortgage firms, etc. So with this presentation comes to a close. Thank you.